Hello there guys, what is going on? Welcome to Pure Trading. It's the 2nd of March. We are looking at the euro dollar. This is a midweek market outlook, or also just to show you what's happened. Was there any setups for Monday and Tuesday and anything up for today? On the euro versus the dollar, across the board, by the way, it's for me dollar strength. Again, still safe havens are what we are buying, what I'll be buying, and the reasons why is the usual thing that's in the news here all the time, and also the inflation was at record highs, and now due to the Ukrainian-Russian issue, it's going to be even worse, and that is according to Goldman Sachs here. It is another reason that raising interest rates for the states is going to be another thing. So it's just adding to the dollar strength idea. We have the European stocks that are slipping, and oil prices are going up $110 a barrel here. So euro versus the dollar. This is the Wednesday candle. This is today. It's Tuesday, Monday. So the thing is that prices were going up. I was hoping to get it up here to at least a level. I was even being more optimistic and thinking that we might get up to that level before I could sell off. But as you can see, we just sold off immediately here on Tuesday. So there was no setup on the beginner strategy. If you were a trend trader, you could easily find trends. I like using Ikanashi charts for trends, but you can draw it on your 4-hourly, and then what you could do is just wait for pullbacks on the trend line. So we need to be patient here in this market. Just wait for pullbacks and then look for setups in that area to come down. And then on the pound, again, the same story there. I was looking at better pullbacks here. However, we didn't get any. This was a usual or a typical area where people would look for the pullbacks. So remember, this is your Monday candle going up, and that's Tuesday just coming down. So you could easily have got in there. However, not on the beginner strategy there, because we are not at a level where there is an excursion beyond the mean. So both the euro and the pound didn't really give us any opportunities. The nicest looking chart for the beginner strategy is going to be this one. It's the dollar versus the yen. We can see here they're both safe haven. They both have a safe haven status here, and therefore we're just seeing like a tug of war. So what we can have here is like a midpoint there. And then as soon as prices are going up beyond that, we could look at it as a better price to get in, to go short. And if you are looking at these levels at the bottom here, so as soon, whatever happens here, if prices comes down, we're looking for a setup to buy. And if prices goes all the way up here, we are looking for a setup then to go short, as long as we are trading beyond the mean there and we are at the level in question there. And then we have the CAD. Now notice the CAD, the oil prices are shooting up, and it's not really backing the Canadian dollar as much as traders would like. So for me, this was a good setup here, the level there. So this comes in on Tuesday. On Monday, prices comes all the way down, and Tuesday the prices shoots up. Let's see if there was a setup there for that day. We can see here that the RSI, is going up as while prices are making lower lows. So there are like 3 different pushes here. This is a low that prices makes, and then it makes a lower low, and then at the same time there we see the RSI pushing up. So it's in this area that we are looking for a decent setup. And then the actual setup comes in when we see a double bottom situation over here. See, it's not really prices making lower lows on this one, but you can see the RSI here. The RSI is still making the divergent setup that we are looking for. So this is a low, that there is a failure to go lower. It causes a double bottom there, and then the RSI. So anywhere in this area we should be looking for going long in for the dollar versus the CAD there. Then the Aussie. So these are all the commodity currencies, the Aussie and the New Zealand dollar, and then also the CAD. These are all commodity currencies. So we can see here, this is Wednesday, that's Tuesday, and then Monday prices shoots all the way up. So this should put us on high alert here to try and get short. So based on this level on the top here, that's a nice level, and we can see with the wicks and everything, it really touches it almost perfectly there to the pip there on that one, and then you could easily have just come down and trade this one short if there was a setup. Let's go down to the 15-minute. So prices makes highs here inside the level. That's your high. It fails to follow through, and the RSI also fails to follow through. So there's no technical setup there at all, because there is no divergence there. It's just doing the same thing. It's just slanting in the same direction. However, here's the nice one. There was a setup on the New Zealand dollar. So here we have our Wednesday candle, Tuesday, Monday, prices shoots up. Yeah, notice the Monday candle here. This is the Monday candle. That there is a level in question. We're looking at this as a level there. So the Monday candle comes in, it touches our level. So we know we are at a good area. Everyone is looking at that area, or this price, as a potential area to go short. Also, we should bear in mind higher up there are also levels. Yeah, so it's all up to you on which sort of levels you would want to take. So if you take this and drag it all the way, we can even see that it corresponds to a previously traded level as well. So that's also very important. So because we are at a level and there was an extension beyond the mean there, yeah, let me just move this line. So you can see prices goes up here on the green candle, and it goes higher up and then comes down. Now if you look at the 15-minute, how it sets up here we can see a typical easy to spot sort of RSI method trade. So if you take these trades all the time, and you're really very disciplined in only taking the trades where you can clearly see that there's an RSI divergence inside a level, then there is no reason for you not to make profits more than not here. So if we take an entry from this area, from that area, and we're coming all the way down, there is about 33 pips there. So the reason I'm highlighting this is because when we are taking trades on a 15-minute, 1-minute, 5-minute chart, we are not really trying to shoot the home run where we're getting hundreds and hundreds of pips, especially in this market where it's very, very uncertain what's going to happen in the news and sentiment. Even the fundamentals are not playing along as nicely as they used to. So 30 pips, and with on a 15-minute chart, that's all fine, unless you're going for a 4-hourly sort of setup where your stops are a bit bigger. But remember, your stops here in this case are like 10 pips, 15 pips, to try and shoot for like 30 odd points. So that is the goal there. And as usual for me, gold is one that I would always want to buy. And the strategy for me with gold is concerned is to try and get your hands on the physical material, or like a certificate or something that proves you actually have the gold. But you can use the charts and the technicals to guide you as to when to actually to buy. And don't forget, this week we also have the non-farm payrolls, so it's more important for you to trade safely and prosper.